Hello and welcome back to Bunnex Investment Group. In this video, we are going to be talking about an Asian session breakout strategy. So it's basically a strategy that actually respects the Asian session, and after the Asian session has been issued, that is when we start to look for trading opportunities. So without wasting much of your time, let's actually jump into the content. The first topic that we are going to talk about is anatomy of the Asian session. What really is the Asian session? So in trading, we have three sessions, which are the Asian, London, and New York. The Asian session works as an opener on all market moves. So basically, we are trying to say the prices will always originate from the Asian session, and whatever has been accumulated in the Asian session is what will be actually stop hunted after the Asian session. So to trade successfully, you must always respect this particular session. So what are the characteristics of the Asian session? Mostly, the Asian session can be seen as a range on the charts. Why is this so? Because the market makers are trying to actually accumulate buyers and sellers into the same region, so that during a session changeover from the Asian to the London, there will be stop hunting of those particular traders. So this comes into play as a way of accumulating contracts in the markets, and the chart observation of this session will be basically a consolidation. So all that will be done will be to convince traders to take positions. So this is the basic characteristic of the Asian session, whereby we have an up-down move like that. Of course, there are some instances whereby you have the Asian session with a long sustained trend. But in this case, most of the times we'll have a consolidation. So basically, our strategy that we are going to talk about will actually need you to know that the Asian session usually comes as a consolidation. So how does this session synchronize in the market flow? Like, we know that there is what we call the market maker cycle, and the first question is, how does the Asian session actually come in the market flow? So market makers use sophisticated techniques to vary the theme. By varying the theme, they will be changing here and there how you see or how you observe the market moves. And although we know that the market maker cycle has three levels, the market maker can replace or place the Asian session in any position of the cycle. So as mentioned in other parts of this method, which is basically the market maker method, the market maker cycle is the same in all time frames. In M1, in M5, M15, we always have three levels, and the perfect time frame for entry is the M15 time frame. So for this particular strategy, which is an Asian session breakout, we'll be looking to get our entries on the M15 time frame. So before we go further, I would like to make an announcement. We have an upcoming bootcamp that is starting this coming Monday by the time of recording this video, which is 28th and 29th of March, and it's only going for $50. Use the link below to secure your spot. So going on, the M15 time frame is the one that we've said we use to attain our entries. So the M15 time frame is the one we use in micro analysis, and levels in this time frame are more subjective. And to reduce that, we try to define them as, we first locate the previous low of day, then second, we observe a push and bounce on 13, another push and bounce on 13, and we have reached what we call the high of day. So what we are basically trying to say is, we'll actually locate the low of day of the previous day or any current day that we are in. Then we see market pushing above and bouncing or touching the 13 EMA and pushing again and touching the 13 EMA, and after that we would have reached the high of day. So what we are trying to say is, this is the low of this particular day, and after that low we can see the market pushed up and bounced on the 13, it pushed up again and bounced on the 13, and we reached the high of day like that. Therefore, if you can see, we have 3 points where we had some consolidation. This is the first point, and this is the second point, and then this is the third point. So take note of that. So within having that, the Asian session can come in any points, which is A, B, or C, right? So if the Asian session comes at a point like A, which is basically a point after the first push of the intraday cycle or the M15 cycle, we'll actually not expect the market to issue us a stop hand. And if it also comes at B, we also do not anticipate to see the market giving us a stop hand. Therefore, points A and B are the valid points for us to actually trade Asian session breakouts. That is, we don't expect the market to go down, but it will be actually a move away from the Asian range like that. So the Asian session that comes and coincides with the low of day are the ones that issue 3 vector stop hands. So if the Asian session comes at this third point or third cycle, at the peak of the M15 cycle, that is where we would expect to see a stop hand. So all this will be actually making an H1 level. I understand it might be confusing here and there, and if you don't get what I'm trying to put across, you may as well consider subscribing for the advanced course. Let's have an example on GBP JPY, and on this particular pair we are going to try and look for the points that we were talking about. So from our example on the slides, we've said the first thing is to actually get the low of day. So in this case, this is the low of day, right? I hope you can see clearly. Let me zoom in. We had the low of day. So from that low of day, we can see that we had the first rise. It's unfortunate I haven't put some EMAs to make things clearer. We have this first rise. So these blue boxes are marking the Asian session period or the Asian session range. So in this case, we can see that this Asian session is falling in the A part that I've shown you on the template on the slide. Therefore, if the Asian session falls on the A part, we actually place our trade after breakout of the session. In this case, the session, the price actually went out of the Asian session, and we can see the price going away straight away like that. Then after that, let me this was the second push, right? And then we had the third push like that. So this last Asian session actually fell in the B part, actually sorry, on the high of day. So in this case, this was on the high of day. So from the high of day, that is when we anticipate to see the 3 levels or the 3 swipes away from that particular session, right? We had 1, then this Asian session was within the cycle, and we traded the breakout. And if the Asian session is at the high of day or at M15 level 3, that is when we actually anticipate to see the market going down. So after that, we can see that the market actually restarted. We started the count again. So after starting the count, we can see that we had the first push, and we are not interested in trading this particular Asian session. We need an Asian session that is within the cycle. So this was the Asian session within the cycle, because we had 1 and we were now anticipating 2. So we wanted a breakout of this Asian session to trade long like that, right? So we had 1, 2, and 3. This Asian session coincided with the high of day. Therefore, we had 3 vectors to the lower side, right? So we had 3 vectors to the lower side like that, and so on. This was another restart of the Asian of the cycle of the count. So we had the first push, right? After that first push, this became an Asian session within a cycle. We expected a straight away, so we actually waited for the market to break above that particular Asian session, right? So that is what you'll be doing. You locate the low of the previous day or of the current day and see where you are in the M15 cycle, and after that you now need to wait for the Asian session breakout. Do not just take any Asian session and think that it will give you a breakout. Trading is an easy, difficult business. You need to be very particular, and no one under the sun is 100%, and that should no one should actually tell you otherwise, that they are making profits all day long or all months long. Sometimes you actually spend 2-3 weeks in loss. Sometimes you actually spend 4-3 months in profit. So it's we actually take what the market gives us. And on that note, we come to the end of this video. Check out our free course that is within the description box below. On that note, see you on the next one.